My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. I'll be one of my friends, just trying to make you some money. My job is not just to entertain, but to educate, teach you, put in context. Call me, 1-800-743-CNBC. Or tweet me at Jim Cramer. We've gotten so used to being afraid that we've been selling stocks for days on end. Sell. In part because we're worried that they'll report not so hot earnings. That includes early this morning when the market got severely oversold before rebounding. Dow closing up 122 points, S&P gaining 0.8%, NASDAQ advancing 0.12%. No one wants to own a stock unless it can report what's known as a BTE. A BTE meaning a better than expected quarter. The tyranny of BTE has cast a pall over this market. But now that earnings season has actually arrived, with PepsiCo kicking things off, many stocks are down big from their highs, and I'm starting to think that they've fallen so far that BTE is the wrong concern. Instead, we should be looking for quarters that are not as bad as feared, or NABF, N-A-B-F for short, NABF. Yesterday, Wall Street was concerned that PepsiCo would fail to deliver better than expected numbers, and the stock plunged from 137 down to 133 and change in anticipation of that bad number. After all, PepsiCo missed. If there was any degradation at Frito-Lay, if there was any market share loss to Coca-Cola, you had to believe that this thing would get clubbed like a baby seal. But as it turns out, PepsiCo's results were not as bad as feared. It was a NABF quarter with strong sales in both food and beverages. While the company didn't raise its forecast, the stock had already been hit so hard going to the report that this didn't really bother anyone. And that is NABF for certain. Gets better. Some of PepsiCo's divisions are truly on fire. Gatorade seems to be returning to the old fabulous growth trajectory it used to have. Now, Frito-Lay's products are being snapped up by millennials. There was a lot to like here. 2 days ago, this quarter would have been a non-event. Today, it sent PepsiCo surging to a new all-time high. And that's not just because it was better than feared. Like I told you last night, when the market gets this oversold, it can act like a coiled spring, with stocks rallying beyond where you ordinarily expect them to go to on good news. So, who else can deliver a NABF quarter? This is the list, people. Get a pencil and paper out. This is the one list you need. First, I expect J.P. Morgan, a symbol JPM, to report a genuinely better than expected quarter next week. Fed funds rate may have been cut. The yield curve may not be perfect, but this is J.P. Morgan's moment. The moment to shine. Banks' gigantic deposit base, this huge advisory business, plain old credit lending, they should all be very strong. As banks generate more and more of their revenue from fees rather than from interest, I'm confident that J.P. Morgan will be able to raise numbers. Jamie Dimon will talk about a fortress balance sheet. That would be much better than feared, so maybe even forget NABF. I'm betting this one will actually be BTE. Second, I'm liking the look of American Express. The stock's been eviscerated here. It's down from 129 in July to 112 today. I don't think Amex will report a better than expected quarter, but thanks to that excruciating decline, it doesn't have to. It only needs to be not as bad as feared. NABF! The rap here is that their business is slowed worldwide because of the trade war. I'm skeptical. American Express hasn't been able to crack into China in any meaningful way. China's the epicenter of the worldwide weakness. Meanwhile, CEO Stephen Squeri, he's breathed new life into this business. This self-effacing man is transforming American Express from a company with a spotty episodic track record into a company that produces smooth numbers, like the ones we come to expect now from MasterCard and from Visa. I think we'll get those again. Next up, there's Abbott Labs, symbol ABT. That's a medical device maker. If you've watched the show for a while, you know I'm a huge fan of Miles White, the longtime CEO, who's created an enormous amount of value for shareholders over the years. We've been buying Abbott from my charitable trust, where you can follow all of the moves before we make them by joining the ActionAlertsPlus.com club. We like Abbott for its incredible consistency, yet the stock is down nearly 9% from its high. Very rare to see that. I think it's an opportunity. Abbott also has a revolutionary new diabetes monitoring device that management can control about on the call. Best of all, the medical device makers are the only part of the healthcare cohort that's been flying under Washington's radar. Fourth, speaking of Washington, the Democrats and Republicans may be united in how they view the drug industry as repugnant. But I still think there's one drug stock that you can buy right here after this decline. It's Merck. This company has tremendous momentum, and it reports on October 29th. The stock is down about 5 points from its highs. To me, it looks like a buying opportunity. I expect Merck to raise its forecast rather dramatically, thanks to the incredible growth of Keytruda, their groundbreaking cancer drug. It's better than Naboth. What else? Oh, here's a real Naboth, Starbucks. Now, Starbucks doesn't report till the 30s, so you got a little timer. But its stock has been crushed. You know, it's been pulverized from 99 down to 84, and that's thanks to excessive enthusiasm when it got to 99, combined with a very odd one-time shade down from early September. The traders, well, they felt like they were chumps if they owned the stock. They've been dumping it ever since. Maybe that makes sense when Starbucks was trading in the 90s, but at 84, sorry, I think it's a buy. Don't forget, they got that nitro. The millennials love the nitro. I get sick to my stomach every time I have it. I mean, honestly, I could drink this better than nitro. 6, Facebook. Yeah, Facebook. Can you believe it? Facebook. I mean, what am I thinking, right? Well, here's what I'm thinking. Even though the social media kingpin had a nice run today, it's still down dramatically from its highs, and it only takes one statement from one politician to reverse today's rally. As investors have rebelled against FAANG and our government has started investigating all big tech, well, this thing has become less toxic. I know the long knives are certainly out for Facebook. I'm not blind. But honestly, I think they benefit from the fact that they're no longer the only big tech company that's been targeted. This company's no longer public enemy number 1. Now it's kind of public enemy number 3 or 4, depending upon the day. That's encouraging dilution. Meanwhile, the users, well, guess what? They still love it. They haven't been talked out of it by Washington or by newspapers that attack them endlessly. They don't seem to care about that stuff, including the call today from the Attorney General to limit encryption. Stop it already. When you talk to the consumer packaged goods companies, as I do, they adore Facebook because it owns Instagram, and Instagram is indispensable if you're trying to reach new customers. I do a Facebook video program daily, and I can tell you that the return on investment, the bang for the buck, so to speak, is phenomenal. I think you'll have plenty of opportunities to buy this one into weakness before it reports on the 30th. 8th, even if we have an economic slowdown, you still have to go to the drugstore. That's why I like CVS, that's Charlie Victor, going into its quarter on November 6th. Now, the stock's been creeping higher as analysts start warming up to its merger with Aetna. Plus, CVS is spewing cash, supports a 3% yield. So they're paying for you to wait for what I bet will be a Naboth. Finally, there's Shopify. Yes, this is the ultimate empowerment story, a company that helps thousands of people set up their own e-commerce sites every week. We hear from Shopify in 3 weeks. We sold this thing for Action Alerts at about 60 points above where it is right now. I think you can sink your teeth in as it goes lower into another dip. Look, there are dozens of other stocks that could work here, stocks of high-quality companies that have just been shelled. I don't know if the market's done going down, although I think we saw an important moment of capitulation during this morning's breakdown, but the oscillator's still not as low as I'd like. Here's the bottom line. When the Labor Department releases its big employment number tomorrow, I bet there will be some sellers. To me, that's the perfect moment to pick up some of these Naboth names, betting they'll be, well, not as bad as feared. How about we go to Brad in Illinois, please? Brad.
Good evening.
Good evening.
I was interested in the value of Savantech. Earlier, they had a failed buyout, and then Broadcom came back to the table in an all-cash deal. So there's supposed to be a one-time dividend of $12.
Yeah, just stick with it. Look, Rick Hill's in charge there. I know he's temporary. But Rick is a moneymaker, and you're going to make money in it. Even at 23, I want to stand there and buy the stock. How about we go to Ali in Minnesota? Ali.
Hey, booyah, Jim. I just have a quick question with regards to the future outlook of General Electric.
Sure, sounds good. What's up?
I noticed that the stock last year lost $22 billion. It's got $108 billion in debt, and it's only got $35 billion to pay for its cash. Do you think this will be a stock that will go insolvent in the future, or is it going to invest into?
No, absolutely not. As a matter of fact, I would say that Larry Culp has got the situation, as bad as it is, frankly, under control. 2019 is a reset year. 2020 will be better. The problem here is not of Larry's doing, and he is really cleaning things up. So I don't want to bail. I do think there could be more weakness, but I do not want to bail. And I'm going to Christian in Nevada. Christian.
Hey, Jim, how you doing? All right. So my question is, I'm currently down in my position in Sprint. Should I sell now, or should I wait it out?
You're on the wrong horse, my friend. You need to be in T-Mobile, okay? That way, with a deal or without, you got John Legere working for you, and Legere is the bomb. All right, watch for stocks reporting not as bad as feared numbers, and stop worrying about BTE after this decline. use weakness to pick up the ones that I've given you here. Oh, man, tonight, Constellation Brands symbol STZ reported earnings today, and the report looked festive with better than expected numbers, but the stock is still dropping. Feel like you need a cocktail after the move? I'm going to talk to the CEO. Then Ulta, faced an ugly sell-off, but the stock's been a thing of pulchritude of late. So where should you stand with the stock? I'm investigating. And after a wild few days in the averages, wondering how you should position your portfolio? I'm here to help when we play MI Diversified. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.